All right, good morning, guys. Those of you watching this after are hearing me now, but there's no one here in the chat room. I've kind of set this up. This right here, this is interesting. So here's the Qs. Let me just go to the Qs, not the TQQQ. There's the Qs. Look where they closed yesterday. These are the NASDAQ futures. These closed 15 minutes after these close. The futures close 15 minutes after the general market closes. I don't know specifically why. I probably just to screw everyone, but this closed well up here. This closed right next to yesterday's close and the open. And that is, I don't remember. That's a huge retracement. I want to go to the 15 minute. Oh my God, it did. Look at that. So I'm on the 15. This is where we closed on the normal markets. Wow. Okay, same thing's happening here on the TQs. Okay, so that's where we close in the normal markets. And then this is aftermarket. And notice this is not aftermarket. Closed, boom, all the way back down. Closed like $4 lower on the Qs. And there's the futures. Boom, right there. Good morning, Paul. Yeah, this is not super bullish action, y'all. This could just be market makers, offloading some from their books, but that's a lot. That's a lot of book right there. And I really wasn't watching I was watching. I came in like a minute or two before it closed, and I saw it up here, and then I didn't look at it after that until right now. Actually, I mean, was no real need to for me, and I did not see that reaction. That's a horrible reaction. Wiped out the entire day's gains. And it's funny. I was listening to the radio, getting my kids, and I was like, "Oh, everyone's like super duper happy the stock market, you know, came back a bunch." And I'm thinking about it. I'm looking at it. I'm like, don't think it's quite done yet. And then, but I didn't know we had this candle and all this reaction. So, going to be an interesting day. I will say that. Maybe a very bad one. We'll have to see. We'll definitely have to see. This is going to be a pretty big gap. I don't know how many gaps we've seen of this size on an index. And so this could point, we talked about the corrections and the bear markets. I'm just going to get rid of this one for now. But yeah, we're going to open. Hold on, doing some work here. All right, we're going to open at 165. At least right now. We're going to open right down here, 165.24. Almost exactly where we closed the other day. And that's, at least on these Qs, that's going to be a 3.39% gap down. I mean, when have we had a 3.39% gap on the NASDAQ to the downside? Wow. That's 1.42. Like, I really can't even think of when this would have been. Let's go check out this little market hiccup. Let's call it a market hiccup. Why not? Yeah, that's 3.39 would have to be like that. And there's a gap up is about 2/3 of that, and that kind of proceeded with a market rally, but a gap down. Looking for a gap down, guys. No major gaps. Little gap up, little gap up. And that's all she wrote. Let's get more time. What up, Eli? Yeah, I heard, buddy. I'm sorry. I heard. There's a little gappy gap. 2011. .37%. Let's draw our 3% line again. That's why earnings are hard to play around, my friend. Very, very difficult. There's a gap right there. That's a decent parallel in terms of a gap. So still ended up with a pretty bad down day. This was down 5% this day right there. I mean, gap lower 2.73. That's a decent parallel right there. So we have had a couple of gaps. Question, is it an exhaustion gap or not? To the downside. We shall have to see. Yeah, earnings are fine. Market is weak. It's an interesting dichotomy that happens from time to time. Markets are forward looking. That's the thing about these situations. Markets are forward looking. Now back here, I think the reasons, at least that, the headline reasons that were given for these moves, a lot of this was Facebook driven. I won't say, all of it was Facebook driven, but it was an opportunity for them to take profits. Over here, there's no major, am I forgetting something, guys? Was there any major news announcements the past, 3 weeks that I just don't remember that kind of started this downfall, or this has kind of organically happened? Because again, the market is forward looking. So they're either seeing like peak economy where we're probably not going to go up, we're not going to grow a ton more in the economy, or they really are just taking profits off of the table. But they usually won't do that unless they see a catalyst of some sort, and it may not be the midterms. It may be something a little bit further out. The people that run this much money, because this isn't us in this little chat room buying and selling this volume here. The people that make that volume are very forward looking. They have a lot of information, and yesterday's action, which again I didn't see, just for those of you joining me, I looked at the market just before the close yesterday, and so let's see here. I got a lot of lines. I looked at the market just before the close, and we were here. We closed right here. This is the NASDAQ futures. This is the S&P 500 index fund, the Qs. Oh, that was you, Christina. Gotcha. Well, let me know what you're doing next. I'd appreciate it. And so the futures, look where they closed yesterday, all the way back down towards the open, towards yesterday's or the previous day's close. You look at, and the thing about this is market makers and professionals will trade the NASDAQ futures much more than they will trade the index funds. You make a lot more money in the futures than you do in the index funds. And what happened yesterday, they sold that in mass. Right after this market closed up here, they sold the crap out of that. They just sold it. So it's going to be an interesting situation this morning to see what's going to happen. We're going to have a gap down in the Qs of, about 2 or 3%. Looks like we rallied 20 cents or something here on the Qs, but we're going to open down about, we're at 165, 2 cents under 165 right now, under 165. So we're right, give or take wherever my mouse ends up. We're, there you go, 95. We're at 165 right now. So we're ticking ever so slightly higher. But yeah, even on the Qs, here's the 5 minutes on the Qs. You can see right after that market closed, ka-chunk, it dropped way down there on pretty good volume. So, and if you go to the futures in the 15 minute, yeah, let's do the 5 minute, why not? So this is the standard market close. This is, the futures stay open for another 15 minutes. Okay, I don't know exactly why. I think it's just to screw everyone, but they stay open for another 15 minutes. Probably gives market makers a chance to clear their books. But they apparently had a ton of longs on their books that they were eating, and if you think about it, if you're a market maker and you've got your long 50,000 Nasdaq futures and you don't necessarily like the market, you wait till the market closes and then you start dumping your stuff. And look at that volume right there, equaling the volume of the closing on the normal markets of the closing bar. So we'll have to see here. So Nick's talking about an EU housing bubble. Someone mentioned that to me. Maybe it was you, Nick, a couple of months ago, that we were kind of having a bubble in the European housing market. Now, there may be a difference though. So in 2008, I'm not going to go too deep into this. What really happened is those damn Clintons. I'm just kidding. Those damn Clintons loosened housing regulations on lenders so they could put more exotic lending options out there for people. And then kind of at the same time, and I don't know if this was due to regulation framework or just markets being markets, they came up with these investing vehicles that took baskets of houses. I think it's 100 or 1,000 mortgages and bundled them together and sold them on a secondary market. So if you didn't want to participate in mortgages in the mortgage industry, but wanted to own the mortgage asset, you could. And they started getting really crazy with those derivatives. And so in the end, it was those crazy loan instruments that gave us our crazy housing bubble and allowed us to get to the point where we kind of had peak housing and people started foreclosing on mortgages because they were buying strippers were buying like 6 and 7 houses, like just stated income loans. So I don't know if I would do a little more research and see if the mortgage instruments are healthy or if it's just housing prices have gone up a ton. And you can look at foreclosure levels, and that's really what killed the American housing market. It wasn't anything extreme. It was foreclosures. Now, there was something that caused foreclosures to get high, but in the end, it's foreclosures that caused the housing market to really, really, truly crash. And the problem was the banks were dealing in these derivatives, and then once these derivatives started going, nobody wanted them anymore because there's a delinquency percentage that is supposed to be that's supposed to cause these derivative assets to go toxic. And the problem was the rating agencies weren't rating them properly. Everything was AAA. Everything was AAA. And so once the large financial institutions, there was like 6 of them, maybe 8, and they were all trading within themselves. And globally, some banks took these on as well. So there's probably a couple of dozen banks globally that were taking on these derivative assets. And then once all the U.S. foreclosures started to happen, once the foreclosure started to happen, all these assets just started, nobody wanted them anymore. And then no one could move, it's called moving paper. Once no one could move that paper anymore globally, everybody was stuck with these assets. They would try to get rid of them for less and less and less, and that's what caused the crash. Anyway. But yeah, I would double check with Europe that it's, Everyone's thinking bubble, bubble, bubble. Everyone goes back to the most recent thing that hurt them. And that's, sometimes not always the case that it may not be an exact parallel to 2008. Because if the market's good and there's no foreclosures, then it's going to be a different catalyst that could cause the market slow down. Not a tank. It probably won't tank again immediately, but could cause a slowdown in that housing market. So, all right, NQ right here forming a little bit of a rising channel. Some people also call this a bear flag in some circles, like namely my circles. I didn't even have to duplicate that. That was pretty well telegraphed. So we'll see how this opens. We've got the market open up here in about 1 minute and 10 seconds. Not sure if you guys can see my counter. You cannot see my counter. Now you can see my counter. 1 minute, 10 seconds. I like this Thinkorswim counter right there. I'll move this back up. That's about all you need to see the top there. Yeah, so that's a lot of talk regarding some other things, and we didn't really get a chance to look at any headlines or pre-market movers. But I think right now, in a market situation like this, you're really looking at the index for leadership, is really what it is. Speaking of mortgages, Ellie Mae's down 20% today. Holy crap, that's crazy. How's Ellie down 20%? So there's Ellie Mae. It's gapping down to 63. So it's way down here this morning. Ooh, that's not good. Ellie Mae is a mortgage breaking very long-term support. 1, 2, 3 years. And it's 62, excuse me. Down here to 62. So for whatever reason, they're selling the bejesus out of Ellie Mae. So starting, like I said, starting down here on the Qs, down about 165. Right down there. Not sure if that's an opportunity to load up or if that's an opportunity, or you're looking for an opportunity to sell right there. But we talked about those high volume candles a couple weeks back. I'm going to go to the daily and just kind of stick on the daily for right now. We know where it opened. And so there's the futures. Closing lower, not my favorite thing in the world on that particular candle right there. Showing resistance at the 200-day on the Qs too. Right there's the 200-day resistance at the 200-day on the Qs and the Nasdaq futures. There's gonna be a lot of people scared right there. A lot of people scared right there. Like, they don't look at the futures or even the overnight market. They're going to go, oh crap, how are we down 3%? They're just going to be confused. Just confusion. And the question is, do we rally off of this level or not? That's a question. Money is overrated. Eli, this is like you, but with another L. Right there. And what do we have in the green today? TZA, which is a 3-time short ETF of the Russell 2000. And then we have Grifols, Dorm, Torch, and a couple other small names. Amarin is also still up. Actually rocketing up higher this morning, ladies and gentlemen. Volume already fairly decent. Need to see how that works itself out. But MMNFF up 0.4. Nope. Where is it now? It's down again. 0.14%. It's like Cupid actually worth something. You're worth something to me, Eli. How much can I sell you for now? Oh, by the way, how's my mortgage doing? I want to make sure that my mortgage is doing well today. Okay, so my house is down 9%. Okay. 9.5%. So you said there was an earnings miss. Just on revenue though. Everyone's like has Bezos pictures up. That's funny. Record profit can't save Amazon from stock market downturn. Yeah, that's going to be that's not a good sign. Not a very good sign when Amazon actually has a lot of profit but misses on a revenue, and then they tank it. So revenue of a 56 from 43 a year ago, but slightly lower. They were calling for 57.1 were the analysts, stupid analysts, and so 56.6 billion was the actual earnings, and the estimates were 57.1 billion. That's what I don't get about these estimates and the analysts. I mean, I get what they're doing. What they're doing is they're basing their investments off of these analysts, but it really has no bearing on anything else. All right, market's turning lower here, 3.23% down on the Qs, and the futures only down 1.8%. There's going to be a big difference between these two today. I mean, you're seeing it right now. It's at least 1%. Yeah, in time, I mean, Amazon's going to be fine, but it looks like this market. Remember yesterday we were looking through scans of large market caps. Let's do that again. But I think at this stage it's just step aside. I mean, remember I said yesterday, it's like I'm just waiting for a market for a follow-through day. Just you can step aside, wait for a follow-through day, and there was a new member to the Power Hour yesterday, my crypto Power Hour, and he said he's new and he's learning to trade and he already thinks he loves it. And I said, well, one thing you can do is take obvious setups, and there's no real setups down here that are obvious. Even this AMRN, which is rocking, probably in time will suscept to whatever forces are right now, going on in the markets right now. So, you're at a level, we undercut these lows. In my estimation, like I said, we talked about undercutting lows, and that's perfectly normal. We also talked about the high volume days over here, which were still lower than those high volume days. And when we did our market analysis a couple of weeks ago, we saw that can happen. You can have lower prices with lower volume than these peaks. And so again, this is what those previous two market pullbacks had done. This is what would be typically considered a correction, coming down here to the 6,500 on the NASDAQ. And we're pretty close to that. So my assumption would be in the next week or two, we'll probably get there, even if we do bounce here. The way the market's behaving right now with the sell-off yesterday in the evening, we'll have to see how today. If today holds pretty strong, I don't know. This day-by-day thing is very difficult, to be honest with you. I know we're here every day talking about the market. I kind of give my theories and my theses, but in the end, it's the market and correction follow-through day. It's those more well-defined signals that have a lot of history behind them. Even the high-volume down days, I think, are important. Those well-defined signals in the market that kind of give you, they're kind of your guideposts, if you will, because the rest of this is just meandering. It's doing what it's doing. We talked about reminiscence of a stock operator during Power Hour yesterday. I was trying to find a passage, and the guy in there that they were referring to, when people would walk into his office and they would say this stock or that stock, he'd go, yes, sir, it's a bull market. And Jesse Livermore kept saying, I never really understood what that guy meant until I was a much older trader. And he says, you just kind of have to go with the markets. When it's a bull market, you go with the bull market. When it's a correction, you go with a corrective action. And you stay with it until there's a clear resolution of the situation at hand. In either direction, until there's a clear resolution of this bearish action, you kind of go with we're moving a little lower till there's a clear resolution of bullish action. Into a correction, you kind of go with everything is a bull. So, and a little bit of a retracement right now. We got the Qs coming back up a little bit. Same with the futures coming back up to this level here. This close from a couple of days ago appears to be a level. Let's look at the triple Qs, down 7% today. Hey, Ethan, good morning. So, there's that high volume day on the TQQQ. It's actually interesting. There's no high volume down day right there for the TQQQ. There's the high volume down day. All right, so let's go look at those big market cap. I'm going to go 500 million market cap. Well, nothing's going to be up over. Let me go. Let me see if there's anything up over 1% with a big market cap. Um, Looks like Intel's up 3%. So that's Intel up 3%. All right, so there's Intel. There's a trend line they had. Maybe that needs to be redrawn as such. PBR, which is an oil company, Petrobras, they are Brazilian, I want to say. I could be completely wrong about that, but I believe they're an oil company. A very nice little bull flag here on the daily. $100 billion market cap company. Very strong. They're at about $15. BBD. Wow. You want to see a W pattern? That's the most well-defined W pattern I've seen in my entire life. Bradesco. No idea what they are. 60 billion market cap company. 200-day moving average above. Well, this technically would not be a double bottom. This still could be a buy point right there that we're already above in the 200-day. I'm assuming oil as well. Vertex popping a little bit there. Some ADR. That's not having a good day. Oh, I guess it's gapping up here. This is yesterday. So a few things looking okay, but not too many. There's Nokia with that crazy little wedge right there that's going to form for the next 3 years, it looks like. IBM, Roper. These are $25 billion companies. These are not very, very big. Okay. And futures in the market's just kind of holding steady right here. Popped up a little bit. Bit of a gap fill. Well, the gap fill would be up here, but filling this little gap right there. 2.4% down on the Qs. 0.9 down on the futures. And volume on the futures pretty freaking heavy for 10 minutes into the market. Keep in mind these trade 24/7, so there's a lot of overnight trading in here as well. But still, this all closes at the same time. And there's a little bit of a gap fill. See if we get that sell-off. Mac had a question. I didn't quite read it. Let me check it out. Do you wait for it to pass through the corrective zone into bear territory before shorting? I'm shorting SPY on gap fill 3 days ago. 274.5. Not sure if I'm dumb or not. Let's check if you're dumb or not. SPY. Well, let's check it out. Uh, 274.5. On this gap fill here, right there, that's a good short. I don't mind that at all. You're not dumb. And is this today already? Did we already have that big reaction? That's crazy. Oh, there's a big spike. Oh. Okay, that's interesting. So yeah, if you shorted this thing, yeah, I would. Well, you got a good short. I'd just be a little patient with it. You know, I don't really do shorting on stocks at all these days. I'm trying not to. I'm just trying to wait for. I'm trying to keep my head clear. But you got a good short here, and if it's swingable, should I close to get my $10? Well, so this is an index. This isn't going to go from 265. This isn't going to go to 200, I don't think. Now we have the same. So here's our correction is here at 250, and here's our bear market here at 263. So this is just a thought. I think we're going to go a little bit lower. I don't know how low. We could go into full-blown correction on the Nasdaq, which would take us down here to the 6600. I can't say right now if we're going to get there on the S&P 500. They're slightly different animals. Nasdaq is much more volatile than the S&P 500 typically. You can see here the Qs, which would be akin to the SPY. This is down 1.47. This is down 2.3. And we're currently down, looks like 12.7% here. And on the SPY, we're currently down 9.8%. So even if this gets down here towards correction, we may not reach the full potential of this 15%. I think it's swingable for a little while longer, going lower. But if we have a good reversal, we may back and fill this for a little while before we break this. We're not breaking right now, so I'm assuming it's gonna fill a little bit more. Probably is swingable for a little while longer, but I think you will have to cover somewhere around 260 would be an ideal cover, I think, for a trade like that. But the S&P right now down 1.5, not really interested in coming higher at all. Now that spike that we had intraday in the morning isn't going to do us any favors in terms of trying to read this chart action. Like here we can see we're towards the high of the day on the Qs, but on this SPY it doesn't look that way. You got to go down to that 5-minute chart to really kind of get a feel, and I hate living on 5-minute charts. Daniel, no, I don't. Not with my strategy. I don't do put options. You can. It's not part of my strategy. So here's the thing. Markets have what's called an upside bias. Markets always want to continue going up. So when these things reverse, they reverse hard and fast, and I don't want to get caught up in that. It's hard enough trying to trade long sometimes. So I'm trying to make my trading more simple. And so, no, I do not trade to the short side. Now, if I see a blatant opportunity, I'll probably throw a trade on there just on don't want to call it instinct, but if I see a blatant trade, like I thought about shorting it as we kind of came up here, but I'm like, yeah, I'm not going to do that, and I didn't, and I don't care. It's fine that I lost out on some profit. It doesn't really bother me. There's more profit to be made on the upside than by trying to force these little trades here, and that's my view. I used to trade long and short all the time, and it just gets stressful. So like right now, I've got that long position on from over here. I'm a little underwater in it. That's okay, but I'm not like managing trades. So when the market does reverse, I'll be able to have a little bit more of a clear head. And that's just something that works for me. Hold on a second, guys. I'll be right back. All right, what's up, guys? Back. All right, market's up a little bit here, kind of holding higher, which is some pretty good action. JD was guaranteed when their CEO was arrested for sexual assault 450% overnight. Yeah, right? But you didn't play it based on that sexual assault allegation, right? You already had that position on? All right, let's go through some of these that are down the most today. It's not a whole lot up the most. Let's go down the most. Amazon down 7%. I've got a lot of lines here for Amazon. I'm just going to get rid of some of these. Okay, so those are arbitrary lines. So Amazon bouncing back pretty hard right there. That's good. That's really good. On Amazon. You know, I don't want to focus on those. That feels like the wrong thing to do. Let's look at what's working. We got Tilray. Tilray up a little bit. TZA is still working. We got Grifols, which is up a little bit after a big spike low. Another MJ stock. CMCM, whatever that is. Silica. I've had CMCM up here for years. I still forget what they do. ADXS. It's just been in a very, very deep downtrend for a very long time. Twitter yesterday, after it closed well down off of the highs, but a good retracement today. Twitter could be, if it holds that gap, that could be pretty good on Twitter. Dorm right there, LPLA, Financial Advisors. Tesla's up 1%. So look at that run all the way through that channel. Pretty good. Roku up today as well, above the 200-day moving average. That's good. MJ looks like it's finding a little bit of support down here. PKG way down. Remember we talked a couple days ago about potentially buying it, and look at all that volume stepping in right there to buy that thing. And they had earnings too, 223. Estimates were 216, actuals 223. That would be where's Kevin at? Kevin, if you're here, that would be a play for you, something like PKG. I know it's not a financial, but it's a very large packaging company. And as long as Amazon's around, PKG is going to do very well. And they've been doing very well for years now. EDU, Waddell Reed & Associates. HXL. O'Reilly, I have an alert level for O'Reilly that obviously has not been hit. Wow, look at that action yesterday. That is an amazing amount of volume. Okay, earnings were after. When they split the conference call, it always confuses me. Okay, so that's earnings, and this was on earnings. That makes sense then. And Weibo. Yesterday we were looking at HCC, a coal stock, and we pretty much found the whole coal industry is somehow bullish. And we talked about the limited supply of coal, especially in the United States. Oh, gotcha, Daniel. Cool. Daniel over here in my my live stream. It's my son Ethan I'm talking to. He wrote a pretty cool little comic. I'm trying to get him to write a Halloween comic for our Halloween party we're having. All right, markets failed to go higher here so far. And Daniel's in your class? Oh, cool. You want to say anything to Daniel in your class? No. You want to say hi, Daniel? Say hi, Daniel. No? Okay. Well, that's pretty cool. Good job, Daniel. Daniel Jeffrey, 2 first names. Let's look at AMRN's my favorite stock of the last month. That's been a rock star, man. To be honest with you, that AMRN, it's getting some pressure here. It did have, now if you look at it on the weekly, it's just crazy. But yeah, it is holding above this level right there. They're eating this thing for whatever reason. Yeah, something about serial killers having 2 first names. Interested to see. Man, type in correction or bear market, you get instant answers from Google. That's pretty cool. Yeah, see, AMRN has earnings coming up too. Let's look at the fundamentals on AMRN. Google revenue falls short as Amazon ad threat grows. Really? That is interesting. So here's AMRN. I'm going to pull it up on the screen here. Here's the investors.com. Let me just go click on that button. There's 76 composite rating. Irish trade by Google. Probably work better in a lot of instances. Irish developer of novel drugs for the treatment of cardiovascular disease with the field of lipid science. 27th in that industry group, in the biotech group. Group rank is 52. EPS change last quarter was negative. They had a good trial, though. That's what that's about, if I remember correctly now. 6.4 billion market cap. Wow. We're not so sure the market will bounce back. See, the thing is, you can even see it right here, right? The market has an upside bias. There's no incentive for the market to drop. No real incentive for the market to drop. So everybody's waiting for the market to go up. And when the market goes up, everyone levels back in. But we're not, we don't think it's going to bounce. Some people may as individuals, but we're waiting for the bottom is what it is. We're kind of looking around, because this is what happens during bear markets, during corrections, during pullbacks, whatever you want to call it. This is when bases form, right? Let's look at Netflix. We talked about Netflix with the Head and Shoulders. We kind of know about that. We talked about that the other day. Now that'd be a good short right there. You want to short this on a bounce. Netflix on the Head and Shoulders. Intel. Trying to look. So here's here's what could be a good base right there. We're looking for things basing right now. Amazon is a good example because this is starting to form a base, right? A base is a pullback in the stock that eventually, here is a prior base right here. A pullback in the stock, and these are usually formed during market corrective actions, downturns, whatever you want to call them. That's usually when these form. And when you have a deep correction like this, and we're not even that deep yet, when you get a correction like this, you really want to see the stocks that are holding up the best, because the market will correct itself. It absolutely will. It has to. If the market goes into a 20-year bear market, there's no more U.S. economy. It's pretty much is what it is. The markets are a function of, I hate to say it, but us being able to print money right now, which is pretty much what's been holding our market up for the past 10 years. And The forces in the market always looking to buy. They're not always looking to sell. You're looking to sell about 25% of the time, looking to buy about 75% of the time. And so there's that upward bias to the market that really kind of leads into us trying to find good stocks. Because, if you're not looking for good stocks all the time, when they finally, turn around and come back, you're gonna have a hard time finding them again. All right, Grifols, Dorm, TZA, Tilroy, Twitter, up 2% today. Eli says, "Damn Tesla! What happened to Tesla?" Up 2%. Yeah, Tesla's doing great, man. See, this is the thing. The shorts right now are just going to get their butts handed to them. Absolutely. I wish they told us short interest more than once every 2 months. Stupid. I mean, come on, you can tell us every 2 minutes if you wanted to. This still shows there's a 26% short float on Tesla. I don't think that's genuine. I think it's more towards 22, maybe 20% at this stage of the game. Yeah, the markets still haven't made lower lows. You can probably even include the Nasdaq in that. Let's go take a peek actually. Nope, no lower lows. We got a little low there, but that's not a major swing low. We are below the 200-day, which is not really great. Not really great. Well, I think you're starting to see that Tesla short squeeze right now, Eli. After that Citron report the other day, that squeezed a lot of shorts. So that Citron report, if you recall, they said they had already switched their position from long to or from short to long, and so you're seeing the result of that short squeeze, right now. That caused a lot of the shorts to be like, oh, why am I short Tesla if Citron isn't short Tesla? Why am I short Tesla? You're going to have a few stragglers, and they're going to get slaughtered as Tesla rises. Doesn't happen right now or later, or next year sometime. That I don't have the answer to. But I'm a firm believer in Tesla, regardless of what you think about some things. So their forward PE is 98, which is a little high. That's going to keep some people in the short game. But as that EPS accelerates, if they double their EPS over the next year, that's going to cut that to 45, and so on and so forth. And if you take Amazon as kind of the rationale for these high PE stocks, Amazon's had a huge, like their forward PE is 70, and their profit margin is, so I'm looking over here, I'm looking at FinViz right now. So their forward PE here is 70. That's next year's, this is current PE. This is next year's PE, next fiscal year. And then look at that, EPS quarter over quarter, 1,100%. That's awesome. The profit margin, gross margin is 38%. Let's look at Tesla. So the forward PE is 98. They have no current PE. And that's not right. They had higher margins than that. I wonder if they've updated their stuff. Yeah, if that's correct, then this is still overvalued compared to something like Tesla or Amazon. But that's not right. They had profit margin last quarter, so they may be basing this off of a fiscal year instead of last quarter. Look at that, 400. October 25th. That was yesterday. That's hilarious. What do you mean investor trading? You talking about my swing trading webinar? I've been asked to do a swing trading webinar. So I was going to do an introduction to stocks webinar for a lot of people that, in crypto that wanted to get involved in stocks. And then I'm not sure what you mean by hints about investor trading. You mean like the IBD strategy? I can do a webinar on that. That would be different to introduction. I guess I could wrap them into the same webinar. Yeah, that would be swing trading. That would be like IBD style. Again, you'd have to define that'd be a specific strategy. It'd have to be really defined what that is. I think that's basically swing trading. 703. Okay, we can go for a little bit. So there's AMRN. Chart looks really good. They had a good drug trial. We were talking about that earlier. Oh, the long term. Gotcha. Well, the TQQQ isn't definitely greater than 1 year. I anticipate that TQQQ strategy you to manage that. You have to manage that daily, I think, because it is a volatile strategy. Like, look at that. We've already retraced a bunch there, but yeah. TQQQ strategy. Yeah, I've been working on that. Not this Halloween. We put on a crazy Halloween party every year, and it takes us a long time to get ready for it. And so I've been really doing that. But I've got about still only about 15% of that done, of that webinar done. Man, Tesla looking really good here, up 2%. I like the volume here recently. Even that sell day right there. Not a scary bar. Volume was high, not a very scary bar. All right, we've sold off here down about 3% there. So the first half hour of the trading day sometimes is when the market likes to play tricks on people. So they were trying to show a rally. Now let's see what's really going to happen. If we have support down here at 165, that could be interesting. But if this maintains lower, we're probably due for some more downside action there. I think Amazon could be fairly telling. I mean, you look at Amazon and Apple right there, the two big dogs, down 8.5%. Looks like they're selling off a little bit. Okay, they were higher, now they're here. Started from the top and now we're here. Apple, let's look at Apple. Only down 2%. Apple's holding up really strong. I mean, really strong. I'm not sure why they're selling off Amazon so hard. Apple's only dropped, I mean, to this recent low here. Local low, 9%, which isn't too bad. What's Amazon dropped? 22% so far. They're really kind of hitting Amazon on the head there. Is that on his YouTube channel there, Daniel? Is that a new video? Yeah, Node Investor and I traded stocks together all through 2013, 2012, half of 2014. It was when my second kid got born is when our group kind of, well, he had his child and I had my kid about the same, my second kid, his first kid about the same time. So that would have been, 2014. So between 2012 and 2014, him and I traded stocks together every week for that whole time period. It's pretty cool. I liked having a group like that. Yeah, we had three guys. Three of us met for a long time. We had a bigger group, but then people weren't as into our strategy. All right, selling off here pretty hard right now, guys. Going back towards the lows. Let's see if we break these lows of the day. $707. I'm going to have to bail here soon, guys. NQ down 2%. Q's down 3.4%. And from here, it may just be a bit of a grind lower for however long we go. And the Q's there starting to undercut. You see that green on my green was down here for a minute, and then it withered away again. They sold off into some of that strength. Amazon down here as well, down 9%. Yes?
May I please, can I watch TV?
That was a super cute way to ask that question, James. Hold on, guys. Okay. All right, guys. I'm gonna run here in a minute. Any last minute questions here? We're selling off here. That big sell off yesterday is pretty disheartening on the NQ on the futures. Even the gap down on the Qs right here. That's going to put some pressure on the market. Like I said, that's going to take a lot of people. A lot of people, are waiting for that bottom print. And I think historically, at least in terms of recent history, they're used to that being really soon. Like you look at these two corrective actions, usually these drops only last maybe a month at most, at least recently. So if this is going to be a deeper correction, it's going to take a lot of people by surprise. And there's that 15% corrective, and then there's that bear market mark if we get down to that level. But I don't know if this is a situation where we go bear. I know that the China trade war is kind of weighing on things a little bit. Maybe they're seeing that, because think about it, you got the world's biggest two economies fighting. That could be reason to take profits and kind of wait for a reload on the economy, kind of when the dust settles from that thing. So, all right, guys, I'm gonna get out of here, get my kids ready for school. Keep the other eye on the markets, and I'll see you guys tomorrow. Have a good one.